Very good morning to you guys. Hope you're doing well. Happy Friday. It's been quite a crazy week, and we kind of knew it would be. And just a reminder, just to be careful and trade sensibly, and have risk management at the forefront of your minds at all times. And yesterday wasn't really an ideal scenario to be trading because we saw a big reversal, and unless you were really, really careful, you probably would have got out a break even. And if you were successful, you could have put in traded something one way. You would have been quite lucky to catch it on both sides because things dipped and then they rallied. So if you were to catch both sides, you would have done incredibly well. However, you could have caught one side and then probably just gone out for a walk. I did that on gold. I managed to catch it as it was falling, put in a trading stop, and then it came back and it took me out, but I was out at a profit. But if you manage to get both sides, if you manage to sell it and then buy it at the right time, you did pretty well, but very, very hard to catch the tops and bottoms. So you do need risk management at all times. And yesterday would have been a flush out event, I think. So I think this risk calc on Monday is going to be quite different. And we're going to see a big shift on the 24-hour difference. It's taken out a lot of liquidity out of the market. And we saw that yesterday on FX. The stop loss clusters were quite small. So I think on Monday we're going to see quite a significant shift here in the 24-hour difference. We won't tip to risk on at the big picture, but we might be risk on the 24-hour difference. Keep an eye on VIX. If we go below 30, that's going to be a good sign for Monday. If we remain above 30, it's looking a bit ominous. Note where yen is. Yen is in the strong sell section now, back to where it was. So it made great advances and it was looking like it was going to be a buy. But then, of course, the retail guys got in and they got involved, and now the yen's gone back over here. But what's interesting is that Aussie is over there as well. There is a mismatch between the two because yen is a safe haven, or used to be, and Aussie is a risky asset. So there's going to be a big battle here for Aussie and yen. And so that's going to be of note. Be careful if you're trading Aussie yen because sentimentally it's going to be tricky. You can see the proximity of the bubbles. You'd be better off buying pound yen, for example, because your pound's over here. But then again, you'd want to be careful because of the BOE, and you want to be careful of the BOJ as well. So that's like one of the worst combinations that you can trade because we've got central bank intervention on the BOE, on the pound, and we've got that on the yen. And it's likely we're going to see an intervention on dollar yen because it's carried on and up and up and up, and it's taking stop loss clusters as we go up. But they do want to keep an eye on it, and they don't want it to keep going higher. So because of this uncertainty, we don't have a trade of the day today. It's likely it might have been a yen trade on our trade of the day, and we definitely want to be careful if the Bank of Japan are going to intervene today. So there isn't going to be a trade of the day. It probably would have been Kiwi yen. Can you see the difference between the distance there? So be careful, I think. And so that explains why there's no trade of the day today. And also, I think we might be risk on Monday at the 24-hour difference because I think yesterday was a big flush. Yields pumped, so that's risk off, and that supports USD. So hopefully you understand that it's a flight to safety in yields. And the dollar appreciates because of that, its connection to its safe haven status. So this would be supportive of a USD, a strong USD. Yield curve is not healthy. It's very out of bonk. These pumped a lot. So the 6 months now given more than the 5-year. So that's quite scary. And yeah, so be careful here. They carry on pumping. We won't be risk on Monday. This is, obviously this is setting the precedence for a bit of a recession warning that we're heading into. Yesterday was probably a desperate scramble to avoid recession, and you could also argue it was a flush as well. Not much movement on the indices apart from US 30. So from the indices perspective, that was the largest mover. Oil is pretty much going all over the place right now. It's just chopping a lot, so be careful there. And also, if you're trading oil, do note that it moves a great deal, much more than your conventional Forex pair. So you wouldn't want to be doing a normal size on oil. You'll encounter like a fairly significant loss if you catch it in the wrong way, because it moves a lot more. It's a bit like gold. If you were to do a normal size in gold, it can really hurt if you're on the wrong side. So that's the commodities for you. And of course, we have to be careful with commodities because of the CPI as well. So I think today could be a hangover from yesterday, and I am not sure whether or not how long-lived this is going to be, because every time we try to fight back the USD, they got slapped back down again every time. So today's going to be important, and I'm quite unsure whether or not we want to be fighting the USD when we have these yields absolutely pumping. So that's like saying risk off, and so the dollar should appreciate. So I don't know if you really want to be fighting the USD. Just be careful. I think if you were to take a Euro USD long, just know that you'd be counter trend technically, but sentimentally, according to my FX book, it is now a buy, right? Because the retail guys are shorting it. So it's just, it depends what you want to do. If you know where your exit is, then by all means take it. But if you don't know where your exit is, don't trade, because then you'll encounter a loss, and you don't want that, especially a large loss. So keep your losses small, and if you know your exit and you get out, don't worry about it. And you can always get out, go for a walk, or you can reverse it, or just as long as you know your exit, because if you get slack, the next thing you know, you're encountering a large loss. It's not very good, and it also doesn't help with the sleeping patterns as well. You wake up early in the morning, check your phone, and you have like bad sleep. It's not good. So know your exit, and if you get stopped out, don't worry about it, just move on. Weekly, see, pound USD was the strongest compared to last Friday, and Aussie USD is the weakest. So logically, you'd buy pound versus the Aussie, and you would have seen that absolutely rocket yesterday, and the pound Kiwi as well, and that went absolutely ballistic. The pound just really outperformed everything yesterday. Do note what I said about the BOE. They're wrapping up. Bailey sent out a message to the fund managers to conclude their business today. He wants to avoid a fire sale in pensions. So that's quite scary. That was quite risk off this week. So, and we've got that big U-turn in the UK government as well. So we're going quite difficult with the pound. There's a lot of uncertainty. And the King met the Prime Minister yesterday as well, and he wasn't particularly happy. Right, so there's lots of things going on with the pound. Be careful. And no trade of the day today. The volatility is too great, and the reversal and risk is very likely, because really we should be risk off. We look at a risk calc, and we should see a stronger dollar. However, sentiment is like leaning away now on some of these USD pairs. The pound USD, I think, is a buy on my FX book. And Euro USD is a 50-50 at FX as a size. So we are veering away sentimentally, fundamentally and technically, perhaps not so good. So this is why we want to be careful. And we could have a big rally, and then we can dump at New York, right? So if we put out a trade of the day now, 7 o'clock in the morning, by 2 o'clock in the afternoon, it's likely to have retraced completely. So on Monday we'll have a trade of the day, but we'll have to have like a caveat just to be really careful, because the volatility, it's not going to magically disappear over the weekend. We'll still have big moves, and it might take a couple of weeks for the volatility to calm down. Okay, but we'll have a trade of the day on Monday, and we'll see how we go. Tiers there, so if you want to join, you're more than welcome. There's no limitation, you're just welcome to join. Telegram, Discord. There's that mad scramble, the desperate scramble. So you could argue it was a flush. And so you keep an eye on this 3628 level. That's the level of interest. I think we should probably be breaking that support, because we might still need one more flush. So we are a sell because it's a positive number on the SSI. But we have come quite a way yesterday. I think we were 1.3. So you see how it's moving towards zero. If it carries on, it's going to be a buy. Okay, German 30 is a buy, and US 30 is a buy. I'm going to do a quick 2-minute video after this into the Discord for the private feed, and we can look at the indices. So there's S&P making a buy. they initially got paid. So that would have been very confusing had you been looking at the trading station at the CPI release. So they went short. Okay, admittedly they got pretty screwed, but then it really fell. So they got paid, and they really shorted here, and then they continued to short for the next hour, and then they sold it again here, and then they sold it ever so slightly, and then they sold it again. So it's up, 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 up because of that. Okay, so initially they got paid, but then they added short, and by adding short over time, hit the timer here, up we come. Okay, so big payday for those guys initially, but then of course they added short. They got a bit greedy and they got punished. US 30, so we're teetering to buy now, buy and sell here. Yeah, just big chop basically, but there's the same logic as S&P. It's the same thing. They shorted it. Initially they got paid, and then they shorted it. So actually they didn't get paid. They went long here. Yeah, so they didn't really get paid very much at all, and then they really got punished. So they got paid more on the S&P than they did on the US 30, and there's that chop there. So oh God, the DAX has been crazy, and there's that support resistance flip, and we've got that support now. I didn't really think we were going to come up above that so quickly. Perhaps inevitably we would have done, but within 4 hours, no, I wouldn't imagine that would have been possible. Big old chop there on DAX, and we could be going into buy. If they continue to sell it, then yeah, it will be a buy. So that's DAX. Be really careful there. It's just absolutely crazy. Gold now, you can see how they've gone along. They bought that there, which kind of makes sense. We were looking quite bullish. However, the CPI came out and it punished them. There were a couple of people who were unaware of the CPI yesterday. I got some messages. Why was the market so crazy yesterday? I was like, well, we had the US inflation data. Oh, right. So do note the economic calendar before you trade. You do want to be aware of these huge risk events. Okay, it's really important. If you don't know the risk event of the day, then you're probably going to encounter like a large loss. But this is the CPI move, and it could have been that they didn't know about the CPI data, maybe, or or they maybe sleeping, depending on where they are in the world. If you're in Australia, you would have been asleep, and that would have caught you. So anyway, they bought there and they sold there, so that's gold. And the trouble is, you have to sleep as well. You can't be awake for 24 hours a day. And it depends where you are in the world. You might be missing some of this economic data and encountering losses. But that's just the way it is. You can maybe move country, but it's not really ideal. So they sold a lot of instruments, which is a bit bonkers. And 50-50 on the Euro USD, undecided. They really shorted the Euro USD. And the largest stock cluster is AU, 61.85. If we go risk on today, which is possible, that's probably going to be safe. If we go risk off at New York, then that's likely going to be probed. So the reason for not having trade of the day is that I think we're going to have a big rally, then a dump. Right? And that's just going to be a nightmare to trade, especially if you're trying to forecast a signal. It's just stressful. And so if you do take a trade of the day, there's no harm in moving your stop ahead of entry in case you do get that reversal, at least you're out. Now, the retail guys are getting really wrecked on a lot of their bias, apart from the pound, but even 3 out of 6 isn't that bad. But, they're getting pretty destroyed on everything. So that would be, that would give you confidence that the sentiment is working. If it's a high number, it means that the retail guys are wrong, and that would be normal. It being so high so early on a Friday is slightly unusual, but we can't complain. As long as they're wrong, that's fine, because we're on the right side of the trade. If we're looking at sentiment and they're getting punished, then that gives us that confidence that we're doing the right thing. And signals, no trade of the day, immense volatility, and the reversal on risk is likely. So that's that. Unless you're obviously sensible about your positioning and your exit, and you're doing the risk management thing about putting your stop ahead of entry as an insurance policy, then you'll be okay. But I don't know if you're doing that. That's the thing. You've got to try and you have to be careful and try and move your stop at entry. It's not really an ideal scenario, but things are just zigzagging so much. Now, the Euro USD has moved away from strong sell and Pound USD has moved away from sell. So there's a big shift. And we were very stretched on the technicals for a while. So whether or not it's going to flip back to strong sell, we'll have to wait and see. It has done multiple times the last couple of months. It's tried to move away from strong sell, but it's just flipping back. The dollar has been very, very strong for all those fundamental reasons. Inflation data from China was worse than expected, but it's still not really that bad, really, because that's where the Fed want to be getting to. They want to be getting to 2%, and that's where China are now. So it's, even though it was a worse than anticipated data, it's still not that bad compared to UK and the rest of the world. US data, retail sales, that could be a mover, and we've got the consumer sentiment. Keep calm, always trade safely. I'm going to do a quick 2-minute video now, and there's some links there. So Patreon, IC Markets, if you want to use an amazing broker, it's really, really good. I give it 5 stars. Promo code for FXSSI and a Discord link as well. And so just be careful, and I'll be back on Monday for the COT data, and we'll see how we go. Do note that the COT data was pointing towards risk on. Okay, so that's worth noting. It did suggest risk on when we populated the data on Monday, and that was quite unusual because we were quite risk off all week. So we'll have to wait and see what the COT data says, and whether or not it confirms the risk on positioning from the banks. I'll speak to you guys soon. Trade safely and have a good day.